Is the Orange County housing market hitting the brakes? Are these signs of a rapid cool down? Well, the Orange County housing market is showing some serious signs of slowing down as we move through May of 2025. Spring is usually the hottest time of year for real estate, but this year, buyers and sellers are facing a different landscape. More homes are coming on the market, demand is falling, and mortgage rates, while slightly better than last year, are still keeping many would-be buyers on the sidelines. If you're thinking about buying or selling, it's time to adjust your expectations and strategy. Hi, it's Christopher and Broox Mahr with MMG Real Estate Advisors, your local Orange County realtors with your market update for May 2025. Now, let's break it down. Inventory surge and seller momentum. The biggest change this year has been the sharp rise in active inventory, as more homeowners accept that high mortgage rates aren't going anywhere anytime soon. They're deciding to move forward with selling. Now, active inventory has grown by 1,785 homes since January and now sits at 4,186 homes, up 6% in just the past 2 weeks. That's a massive 45% increase compared to this time last year when inventory was only 2,320 homes. While it's still 43% below the pre-COVID average of over 6,000 homes, this is the fastest inventory growth we've seen since 2010. Many homeowners who had been hunkering down with ultra-low mortgage rates are finally jumping back into the market. In March alone, 2,883 new listings hit the market, 18% more than last year, though still 26% below pre-COVID norms. Buyer demand slips again. Unfortunately, buyer activity isn't keeping pace. Demand measured by the number of new pending sales has fallen for the second straight period and now sits at just 1,546 pending sales, down 3% over the past 2 weeks and 10% lower than this time last year. That's despite mortgage rates dipping from over 7.5% in April of 2024 to around 6.82% today. While that's an improvement, it's still not enough to drive a real buyer surge. Consumer confidence took a hit after recent economic developments, including April's tariff announcements, and volatility in the financial markets continues to create hesitation. Many buyers are sitting on the sidelines waiting for rates to drop further. The reality? We may not see rates dip meaningfully below 6.5% unless the broader economy slows significantly. Expected market time climbs fast. With inventory rising and demand falling, the expected market time, or how long it would take to sell every home currently on the market, has jumped to 81 days. That's up from 62 just 6 weeks ago, and the highest late spring pace since the COVID lockdowns in April of 2020. By comparison, expected market time at this point last year was only 41 days. This shift is a clear sign that sellers can no longer count on quick sales or multiple offers unless their home is priced right and move-in ready. In fact, 30% of the homes currently on the market have already had at least one price reduction, and 50% have been sitting on the market for over a month. Strategic pricing and staging are more important than ever.
The luxury market softens at the top. The slowdown isn't just in the mid-range. Orange County's luxury market is also feeling the chill. Inventory of homes priced above $2.5 million has climbed to 1,142 properties, up 3% in 2 weeks. Meanwhile, luxury demand has slipped 7%, now sitting at just 150 pending sales. As a result, the expected market time for luxury homes has jumped to 228 days, up from 205. At the ultra-luxury level, homes priced above $6 million are seeing an estimated market time of 584 days. The luxury market is slowing faster than the rest of the market, which is typical when Wall Street volatility increases and discretionary spending cools. Key takeaways for buyers and sellers. Sellers, this is not the time to test the market with a high asking price. The competition is growing and buyers are more cautious. Homes that are priced right and show well will still move, but homes that are overpriced or need work are sitting. Focus on fair market value based on real, recent comps. Now buyers, you now have more options than we've seen in years. While affordability is still a challenge with rates hovering near 7%, this market gives you more time to make thoughtful decisions and the leverage to negotiate. If you find a well-priced home in a great location, you have more room to act strategically. So what are MMG's final thoughts on the Orange County housing market? The Orange County housing market is clearly shifting. Sellers are returning, but buyers are more cautious than ever. Until mortgage rates drop significantly or economic pressures ease, we can expect this slower pace to continue into summer. Whether you're buying or selling, preparation and strategy are key. If you found this video helpful or informative, please be sure to hit that like button and subscribe. If you know someone who may benefit from this information, feel free to give it a share. And until next time, thanks for watching, and we'll see you on the next video.